Is the Silicon Valley real estate market bottoming out already? In this video, I want to cover some macroeconomic trends that are affecting the real estate market overall. Then I want to go over the latest Silicon Valley market data through January of 2023. Next, I want to cover some micro data of specific listings that I've been following. And finally, I want to put it all together and address the question of whether the Silicon Valley real estate market is in fact bottoming out. Now, I've got some great giveaways for you at the end of this video, so be sure to stick around for that. First, let's take a look at mortgage rates. From November to the beginning of February, the 30-year fixed rate mortgage has been on a downward trend from just over 7% to just over 6%. In the last couple of weeks, it has ticked up a bit, and at the time of this recording, it's at about 6.25%. If we look at mortgage rate projections from three major prognosticators in the mortgage industry, we could see that overall the forecast is for mortgage rates to decline further from about 6.25% down to about 5.6% at the end of 2023. This chart is from Keeping Current Matters, a real estate market analysis firm, and it's characterizing the relationship between buyer demand and mortgage rates. Last year, as mortgage rates were rising, there was still strong buyer demand in the range of 5.5 to 6% for the 30-year fixed rate mortgage. As we moved from 6 to 6.5%, there was still fairly good buyer demand. And then as we got into 6.5 to 7 to 7.5, that's where buyer demand started to weaken. Now, if we think about mortgage rates coming down during 2023, we could hypothesize that you would see buyer demand starting to come back and grow stronger as they move down into that 5.5 to 6% range. And I'll cover more evidence of this trend later in this video. This is a recent quote from Mike Simonson, the CEO of Altos Research, which is another real estate market analysis firm. Looking at the latest housing data, he sees surprising demand indicators, including home price resiliency and supply staying restricted. We'll see evidence of this observation in our Silicon Valley market data. Let's get into the market data through January. I have Santa Clara County and San Mateo County side by side in this table. The median price for single-family homes was down year over year to about $1.5 million in both counties. This was flat from December to January. The average days on market was up year over year to about 35 to 40 days. And the sales to list price ratio was down year over year to just under 100%. Again, this was flat from December to January. The number of sales was down significantly year over year for both counties. And the number of active listings was going in the opposite direction, increasing substantially year over year. This leaves the months of available inventory going up from about 1 month a year ago to about 2.3 months of inventory in January of this year. Now, to put this into perspective, compared to January of 2009, which was the height of the market downturn in the middle of the Great Recession from 2008 to 2010, at that time we had 9 months of inventory. And the National Association of Realtors categorizes any market that has less than 6 months of inventory as still being a seller's market. So 2.3 months of inventory is still not a lot of inventory. Now let's get into some specific case study examples. First, we have a recent sale of a condo in Redwood Shores. It closed escrow on December 14th. It was on the market for 37 days. The sale price was $1.05 million. and the list price was 1.078. The sales to list price ratio was at about 97%, so right around the average for San Mateo County. This was a 3-bedroom, 2-bath condo, 1,518 square feet. It was built in 1980. It did have some nice updates in the interior, and it had some great amenities like a community pool, spa, and clubhouse. And this area has some top public schools. In our next case study, we have a single-family home in Belmont. It sold on February 2nd, 2023. It was on the market for 43 days. The final sale price was $1.95 million, and the list price was $1.998 million. This one also sold at about 98% of the original list price, right at the average for San Mateo County. This was a 3-bedroom, 2.5-bath home with 2,110 square feet. It was built in 1979. It's up in the central Belmont area, up in the hills, so it had some beautiful views of the San Francisco Bay. The interior was older and could definitely use quite a bit of updating. And this area also has very good public schools. So these first two examples are coming in right at the average in terms of days on market, sales to list price ratio for San Mateo County overall. This last example is an active listing of a single-family home in San Carlos. I also showed this example from last month's market update. It's still active on the market. It's been on the market for 73 days. The original list price was $2.6 million. There was one reduction to $2.5 million. It's a 3-bedroom, 2-bath home with 2,140 square feet on a 6,720 square foot flat lot. It's set in a little private court that's off of the main road, and yet it's close to the downtown San Carlos area, which has a lot of amenities like restaurants, cafes, places where you can run errands. And this neighborhood also has highly regarded public schools. Back to the original question, is the market bottoming out? Well, we saw that inventory is higher, but it's still not that high at about 2.3 months. Prices in January were flat overall from December to January. Mortgage rates have been declining overall, and the forecasts that we showed them declining down to the mid 5% range by the end of 2023. And anecdotally, from what I've seen in the last few weeks and from conversations with other real estate agents, the market is definitely picking up. There were homes that were sitting there through November, December, January that maybe had one price reduction, and then suddenly they went into escrow without further price reductions. So my conclusion overall is that there are many signs that are pointing to a market bottom, and I'll continue to track these data points over the next few months. But I do believe that now is a good time for buyers to get into the market while they still have some leverage with sellers compared to last year when the market was heavily weighted towards sellers. As promised, I have some giveaways for you. In the description below, there's a link where you can go to download these slides. If you're thinking about selling your home, I have a free seller's guide. It's at the same link in the description below. Reach out to me if you'd like a complimentary home valuation estimate. And if you're thinking about buying a home, you can get my free first-time home buyer's guide, as well as a home buying guide with information that's relevant to our current market environment. You can get both of those guides in the same link in the description below. And please feel free to reach out to me for a free consultation on the home buying process. We can also talk about specific neighborhoods that you may be interested in. This is Philip Ma with eXp Realty. Let me know how I can help you in navigating the Silicon Valley real estate market and achieving your real estate goals.